Welcome to Investors Insights. Our topic today is insightful holiday conversation. We've had some clients call us and say, hey, Greg, Trey, Bobby, Ty, and Adam, give us some insightful conversation details that we can use during the holidays, especially Thanksgiving coming up, mainly because we can't talk politics, we can't talk religion, and I'd really like to sound like I'm on top of things at our family get-together and with friends. So with that, we've decided to commit here and give you a lot of information. So grab your pen and pencil or get ready to type on your laptop, because from the standpoint, we hope this information will give you great insight as you enjoy your family and friends. So I am joined by my distinguished colleagues, Trey Booth, Bobby Norman, Ty Miller, and Adam Van Zant. And we've had a great meeting here and also had some good laughs as we thought of holiday topics around the Thanksgiving table. So Trey, why don't you start us off? I thought you had some great insight on topics like inflation, which everybody is asking us about, as well as consumer sentiment. Will people go out and actually buy those family and friends Christmas presents?
Yeah, definitely. Thanks, Greg. Nothing more holiday spirit in America than the U.S. consumer. And so last week, the University of Michigan produced their consumer sentiment. It hit a crisis low. You can see on this chart where actually consumer sentiment is actually lower than it was back in the peak of the COVID recession in 2020.
Yeah.
With that said, so where is that going to turn, or what does that impact markets and the spending? You can see on this chart here where you look at goods purchases, while it seems to have leveled off, it's definitely not coming down. And so what drove the consumer sentiment to be so negative? It's not spending. It appears to be inflation. And so is there any hope on the other, in looking out to the future that inflation may come down? Well, one of the drivers of inflation, there's a lot of talk about, in one of the front lines of inflation is energy prices. People fill up their gas tank often, and when they see higher prices, that impact consumer sentiment directly. An area where we may see relief is in gas prices. Part of the infrastructure bill that President Biden will be passing had a funding mechanism of selling some of the U.S.'s strategic petroleum reserves. The U.S. can on millions and millions of barrels for emergency use. And part of the funding mechanism was to sell some of those barrels. During the crisis, when prices were dropping, we had the reverse action where the Trump administration purchased oil in the open market and added to the strategic petroleum reserve, 77 million barrels. So if the Biden administration now turns around and sell those, we went from $20 a barrel up to $80. That's one of the most profitable trades I think I've ever seen in a year. The U.S. government turned around and make over $4 billion. So that's a huge funding source that also could help consumers just in time for the holidays as we sell that oil onto the market, bring prices down. So we could see that sentiment hopefully bottoming right just in time for everyone to get together around the Thanksgiving table.
Yeah, so that's great insight that the U.S. government actually made money on a trade, involving energy. And secondly, you're starting to say, okay, well, anybody point to the turkey and say, how much this turkey cost? Have you seen the price of turkeys lately? Oh, my word. So, very insightful there, Trey. And I think that should have everybody's attention, especially regarding energy prices and infrastructure bill. Bobby, at the same time, though, inflation is the hot topic. No pun intended, hot prices, hot topic. But you've got more insight in terms of what's going out there in corporate earnings. So talk about it.
Yeah, no doubt about it. Hot topic. Past few weeks has been inflation. It will continue to be the hot topic. But the question is, what do we look at specifically and where inflation could hurt the market? One area we look at is inflation's impact on corporate earnings. And so as you can see in this chart, we've seen a clear turn lower in operating margins recently. In fact, we've been watching operating margins for some time now. And the fact that we have now seen 2 weeks where they have been moved lower at the very least deserves some attention. But it's also important to point out in the chart that margins are still very strong historically. But the market has been concerned about rising costs, and it finally appears to be reflecting in operating margins. So we'll continue to watch this very closely to see what direction corporate operating margins goes next. But inflation is going to be the hot topic, no doubt about it.
Yeah, around the Thanksgiving table, and also when it comes time for the holiday shopping to take place, it will be the topic. So that gives people some insight in understanding the operating margins. In addition to that, though, we have people say to us, all right, guys, help me out here. So I can talk operating margins. I can talk inflation at the Thanksgiving table here. But what are some of these terms? Explain them in terms I can share with the family. So Ty, you talked about that this morning on some of these terms. Elaborate on that for everybody.
Yeah. So as you said, inflation is the hot topic. Fed keeps saying transitory. What does transitory mean? What's their definition of it? Well, it can mean a lot of things. It's temporary, but temporary for a year or temporary for 3 years. Who knows? But last week we got the Consumer Price Index, or CPI for short. It was up at nearly a full percent for the month and 6.2% from a year ago. So that's obviously hot. It's hard to keep up with. However, when excluding food and energy, which is common practice because this is for CPI, these prices tend to, energy and food, they typically are more volatile than other measures. It's only up 4.6%. So still hot, but not nearly the concern of 6.2%, of course. And then on top of that, the Fed, this Fed's typically shown that they pay attention to the PCE, the Personal Consumption Expenditure Index. And that's been showing up 3.6% for the last 3 months. So it's holding steady there, still a little elevated. But, as you can see on this chart, we're still struggling to get to 2% average for the last 10 years. Even with this 6.2% right now, we're barely there. And so, it's just hard to tell, are we making up for lost time? Or, is the Fed going to start tapering and ramping up rates at a faster pace? So that's what the market's trying to figure out here.
Yeah, and rising interest rates will be a topic around the Thanksgiving table as well. You're absolutely right about that. And in addition to that, what you're talking about, what inflation has averaged over the last 10 years, we encourage people, we're watching that very closely. Also in previous vlogs, we've talked about supply chain disruptions and how that also has caused prices to go up because companies as well as individuals go, I'm going to buy twice as much because I'm afraid I can't get it, in the coming weeks. And we may see more of that as we get into the holidays because people will be entertaining. Also, people are still just trying to take care of different situations regarding if it's a new car, if it's construction, renovations, those kind of things. We're seeing that, having conversations with clients across the board saying we're going on and do it because we're afraid the price is going to go higher. So, and then Adam, talking about higher, throughout this year, we've had people, calling us or having conversations, meetings saying, can this market go higher? You've continued to report some great technical analysis in terms of the markets, and we're looking where money's still going to be coming into the market based on what Bobby and Trey and Ty have said. So talk about the indicators we need to be watching.
Thanks, Greg. And this morning, as a portfolio team, we kind of talked about the momentum we've seen in the overall markets for the month of November. Last week we had 2 days that we saw a pullback. We had some rumblings of a possible pushback in the markets. But on Friday, we actually saw it close up at 4,682. That's on the S&P 500. That gives us a new resistance level of 4,715 with a new support level of 4,655. We're also seeing a 50-day moving average start to creep up on the 4,500 mark. So it's currently sitting at 4,492. It's also important to keep in mind that not only are we looking at the overall markets, but we're actually looking at the individual sectors and industries within these markets to see the trends and the momentum that we can hopefully carry through the rest of the year.
This information that we provide you today, we hope at the Thanksgiving table and as you go into the holidays, one of your relatives will say, Uncle Bob is really brilliant on this economics. Aunt Lucy is amazing on the details about inflation. It's been unbelievable, the information I got this year. And in addition to that, we're on LinkedIn, Facebook, Twitter, and our podcast. And we want to keep giving you information, not only to keep the anxiety down and your confidence there for a better, richer, fuller life as you look at your financial blueprint in relation to your portfolio strategies, but also as you interact with people around you and realize that a lot of positive things are going on despite some of the negative news we hear. We hope you have a great week. We'll look forward to talking to you as we start the week of Thanksgiving. We'll keep you updated, and we really appreciate you sharing this with others and tuning in. Thanks again. Talk soon.